If you've been trying to improve your credit and nothing seems to be working, chances are you're paying the wrong things off in the wrong order. Today, I'm breaking down exactly what to pay off first if you want to improve your credit score as fast as possible, especially if buying a home is one of your goals this year. Hi, welcome to Invest with Jim, where you'll find real estate insights that no one else is sharing. I'm Jim. I'm a real estate agent and investor here in Las Vegas. Let's get straight into this. So how do credit scores actually work? Your credit score is mostly based on payment history. Do you pay on time? Second is credit utilization. How much credit are you using? Length of credit. How long have you had credit? Do you have new credit? Did you just buy a new car? Did you get new credit cards? And credit mix, finally. Do you have installment loans like a car note? Do you have revolving credit? But if you're trying to improve your credit score quickly to qualify for a mortgage, credit utilization is the big one. So let me give you a quick little example about this. I'm just going to use nice round numbers. Let's just say you have a credit card, you have a $10,000 credit limit on it. If you have a balance of $7,000, your credit utilization is 70% on this card. That is viewed as very high utilization. Even though you have another $3,000 of available credit, the credit bureaus, they're going to view you as a high credit user. Ideally, you want to be below 40%. So that would be a balance of $4,000 or less. If you have a $7K balance on a $10K credit limit, ideally, you want to keep your balance below $4,000 on that. And that can improve your credit score tremendously, 20, 40 points at a time even. Another example is, let's just say you have 3 credit cards. Your first credit card, you have a $5,000 credit limit and your balance is like $4,500. That's a 90% utilization. But you have another credit card, let's say it's an $8,000 credit limit, but you only have a $1,000 balance on it. And then finally, let's just say the third credit card, you have a $2,000 limit and you have a 0 balance on it. Even though you are barely using much of your available credit, that one high utilization card is actually hurting you. So what you want to do is spread them out so you're below 40% on each of any of these, and that's going to improve your credit a lot as well. Next, this is a very common question. What should I pay off first? The first thing, yes, you want to pay down the credit cards that have high balances or high utilization. After that, some people like to pay off the highest interest credit card first. This will save you the most money on interest when you pay on the high interest card first. But some other people have a hard time with this. Some people want to just pay off a credit card. It's a low balance, let me just knock it out. That also works as well too, because you want to see progress. If you're plugging away on a high balance and you're not seeing much results, I know it can be discouraging. Some people are like, that's only a couple hundred, let me just knock these out. That's good too. You can pay those off, but what you should not do is close these accounts once you've paid them off. That's key on this. If you really want to optimize and save your money, pay off the high interest first. If you want to see progress and it's more psychological for you, maybe you knock off some little ones so you see some progress and then you build momentum that way. But again, the utilization affects you probably most in terms of qualifying for a mortgage. The method of paying the higher interest rate cards first, let's just say you have 2 credit cards with balances. Let's say you're below 40%, but what if one had a 20% interest rate and the other one has like a 7% interest rate? If you pay off the 20% interest rate first, you're going to be paying less interest over time versus the 7%. And that's what I mean about saving you on interest by paying the high interest cards first. Number 3, let's talk about past due accounts. This is kind of a trickier one. Let's just say you have pretty good credit, but you recently went late on an account. That's recent. It's going to hurt your credit when you pay it late. So you want to get those back to current, but don't confuse that with a very old past due or charged off account. If you've had an account that has been kind of charged off or delinquent for like 5, 6, 7 years, you don't want to touch those. You don't want to make payments on those, because by making a payment on those, it actually re-reports it to the credit bureau and it's actually going to hurt you negatively on your score that way. These are tricky too. So I mean, if you're doing this for the purpose of qualifying for a mortgage, this is why it's very important for you to talk to a mortgage advisor first so they can pull up your credit, look at all your trade lines and see where your payments are going to help you the most when qualifying for a mortgage. And if you need to be connected to a mortgage advisor, reach out to me. I'll be glad to connect you with my mortgage advisor. They'll walk you through the whole process, let you know step by step which card to pay first, how much to pay on which one. And who knows, sometimes you don't want to pay any of these until you're ready to close on a house, and you might be paying them through escrow at that point. So if you're in that situation, reach out to me. I'll connect you with the right people to set up a game plan or repayment plan for you, which optimizes getting approved for a mortgage. Next is, let's talk about what not to pay off. First thing, don't worry about paying off student loans. They're generally lower interest and they actually have low payments. There's a little more forgiveness on those. The other thing that you should not think about paying off completely is maybe a car loan. Because one thing about a installment loan like a car note, if you have good on-time payments for years at a time on this, that is actually helping your credit. So if you just said, well, let me just pay off this car note, it could actually hurt your credit score because you had a very good positive trade line with an installment loan with the car loan, and then you paid it off. and now it's closed could actually hurt your credit score. A lot of people don't know that. As I mentioned before, do not close credit cards. That will hurt your score as well too. Just have the discipline. Cut up the card, throw it away, take it out of your wallet, remove it from your phone. Just have some discipline. Pay off the credit card. Don't use it, but don't close it. So those are the main things. I know it sounds much easier than actually doing because it takes time. Let me tell you some quick credit boost tips too. First thing I always say, ask for credit limit increases. What we talked about earlier about credit utilization. Let's say you had an $8,000 balance on a $10,000 card, that's 80%. What if you ask for a credit limit increase to say $20,000? Now you're at 40% all of a sudden just by increasing your limit. Again, be disciplined. That doesn't mean more money for you to go spend. It's just now you have a higher credit limit, and that actually helps your credit score because it's showing that someone's willing to let you borrow more money. Ask for credit limit increases, not for the sake of shopping sprees, but for the sake of improving your credit. And if you're planning on buying a home, don't go open new trade lines. Don't go finance furniture, get a new car. That's like the worst thing you can do. And if you're able to make extra payments in the same month on anything, it's okay to do that too, because it's showing another positive payment and it actually reduces your utilization as well too. It might not affect it as much, but every little bit counts. Another thing you can do is be added on as an authorized user on an old, very clean card. This is something that I'm probably gonna do with like my kids. When they get a little bit older, I'm probably gonna add them as an authorized user to one of my older credit cards that are in good standing. That's gonna help them establish credit. My good credit is now being transferred to them. This is something that my dad did for me when I was young. It was a great way to help young people or your kids to establish credit based on your good credit history. So if you have mom, dad, friend, or somebody that has great credit that is willing to add you as an authorized user, this could help your credit score as well. Your credit score will impact on what kind of interest rate that you're gonna qualify for, because your credit score is really important to you when a mortgage lender is actually pricing out your loan. It's gonna affect your interest rate. If you have a 650 score versus a 750 score, there's gonna be different interest rates that you're gonna qualify for. If you have good credit, they're gonna see you as a less risky borrower, and you're gonna get better terms. If you're putting less than 20% down, if you have a high credit score, that can offset some of your mortgage insurance. And if you have a lower interest rate, you're gonna then have a lower monthly payment, which then overall will affect what your debt to income ratio in qualifying as well too. Because 20, 40, 50, 60 points on your credit report, it could be the difference of thousands of dollars over time on your mortgage, honestly. So it is important to consider these things. Here's a good point too, is what is considered a good score? I meet people all the time and they're like, I have great credit, it's 650. And then I meet someone else and they're like, oh, you know, I'm working on my credit, I have a 750. I always say, you wanna be over 750. You're gonna get the best terms that way. If you can get over like 780, that's like primo. But if you're talking about 650 to 700, there's a difference there for sure. I would definitely try to be in the 700s. You'll get way better terms on your mortgage that way too. So if it's in your power, you should really try for that. I hope you found this video useful. I say at the end of all these videos, reach out, make an appointment, let's connect, right? So a subscriber to the channel reached out to me. Shout out to Alex for giving me this idea. He lives in Southern California. He reached out to me. He's like, Jim, cost of living here in SoCal is so high now. I'm thinking about relocating to Las Vegas. What should I do? Then I learned from meeting and talking to him that he owns his own business. We had to talk about how do I credit qualify for a mortgage? How much income should I be reporting now so I can qualify for a mortgage? We did a Zoom call and then he actually came from LA to Vegas to see some properties. But I remember he's like, hey, Jim, you should do a video about improving credit scores. So here it is. This one's for you, Alex, but I'm sure a lot of you out there are appreciative that we covered this topic too. And that's why I think it's important. Don't be hesitant to reach out. If you're sitting there thinking about, hey, you know what? I'd like to talk to Jim and go over my game plan and see what he says for me. Please do. Don't hesitate. That's one of the things here about this channel. I'm really trying to connect with actual people here. If you want to connect with me and go over your situation, I'll give you the best advice that I know. If you want to just be anonymous, fill out a form on Zillow and then have some random agent call you, you can try that as well too. But if you want some human connection here that's actually going to listen to what you have to say, reach out to me. Don't hesitate, all right? And if you're still not ready to do that, just drop a comment below. We get a lot of great engagement and comments too, like, hey, Jim, why don't you cover this topic? I'd love to cover these topics, you know, because the point of this channel is to bring you insights that no one else is sharing, right? So tell me what you want me to share with you and I'll do a deep dive for you. I'll do the research. I'll present to you what I find. But for now, be sure to hit like and subscribe and share this video with someone who would also benefit from the content that I post on this channel. I'd love to connect with more investors or those wanting to become investors in the future. Thank you for watching and I'll see you on the next one.